I still believe that we wait till March. I still, I still have only 3 hikes when the market is clearly pricing now 4. I think what's happening on the equity market is going to give the Fed a bit time to think, because the Fed is also about volatility suppression. They don't want to kill the wealth effect. So it's going to be a very interesting situation. I mean, the inflation in the US doesn't seem to recede now. So, of course, the price stability mandate is really high on the agenda. So, we saw this very hawkish FOMC minutes, but even more importantly, we see the hypersensitivity of markets to any word, every and each word of what comes out of the policymakers, which shows that we are not in a normal state, right? We are not in a normally functioning economy if every word of what a policymaker at the Fed says is having so many repercussions, I would say, on how investors and agents behave. So we are expecting them to be still very cautious, still very worried, drop the language that they tried on temporary, even though we believe they are still in camp temporary also here. Why? Because it's the slowest tightening cycle we've seen. We have 7% inflation and the market is pricing 4 hikes. There is something that hasn't figured, right? So this is going to be yet again a very critical meeting on the tapering, which we still expect to be done by March, but I'm still expecting, I would say, the first hike in March, not before.
I want to talk about
if they were to do it before, that would surprise the market massively.
I want to talk about other central banks too. My colleague Jeff will be speaking to Christine Lagarde at the ECB and Haruhiko Kuroda over at the BOJ. And it's been an interesting week. The BOJ has been telegraphing a path towards exit eventually. And the ECB has said effectively that we are not like the United States. We don't have to follow the same path as the Fed. Just to weigh in on how these other central banks that have been dovish for so long start to move over the course of this year.
I mean, this, can you imagine, Karen, a year ago, everybody was projecting Q infinity. Everybody thought that, central banks will never get back to form of normalization. And now we hear about the BOJ trying to think about a normalization. So the TINA world, there is no alternative where everybody was expecting central banks to stay and the world welcome they stay is over. This is very good news. This means we're getting back into a normally functioning fiscal and monetary policy mix. And so for me, this is good news. Of course, timing is very different. The US is clearly a bit overheating. Japan is underheating still, and whatever is happening in China is not helping because there is a problem also of deflation in Asia right now because of the supply chain disruption and zero COVID policies. In Europe, I would say we're in the middle, we're in the libos, right? So President Lagarde has been reassuring that there will be no hike in 22 because some people were asking about that. I think what's going to be very interesting is that maybe whatever the Fed does is going to do the job for Europe. We're going to import enough tightening, and we're going to import enough I would say, pressure, and we see that already on the Bund. And you mentioned that the Bund was, that the German 10-year debt was very close to, debt yield was very close to zero. We're getting already a bit of the friendly pressure from the transatlantic spread. I think President Lagarde's big job now is to manage the expectation about the end of the pandemic purchase program. Because as you know, Europe is not in the same state as the US when it comes to the quality of the rebound, even though it's good. Also in labor markets. And the next phase is, of course, managing the fiscal side, because Europe has a big fiscal cliff ahead. At the end of 22, we don't have the rules that hold anymore, the exception to the rules that hold anymore. So we have to invent the future. And so the question is whether the ECB stays in the game a bit too much to manage, the financial stress that could come from an early unplugging of the fiscal profligacy, or whether they want to regain some room to maneuver. They want to stop fiscal dominance and regain some room to maneuver. That will be decided as soon as March. So as you see, March is spring is going to be hot everywhere, around central bankers.